the collapse in investor sentiment or consumer confidence, that all happened around February 2018. So really that coincided with that first low that was made in 2018, and the market began to stage its recovery.
Tom Lee discusses the collapse in investor sentiment that began in February 2018, marked by heightened uncertainty around trade policies and tariff. This sentiment shift coincided with a market low but paved the way for recovery as investors adjusted to the environment. Lee believes businesses and investors are now holding back due to unclear policies but anticipates a strong recovery driven by tax reforms and high cash reserve. In the crypto space, the market faces mixed signals. NFT sales have declined significantly, yet some collections show resilience, defying broader downturns. Cryptocurrencies like XRP are under pressure, with bearish technical patterns and macroeconomic challenges suggesting potential price drop. Regulatory developments, however, may provide stability and influence market direction. Lee remains optimistic about a V-shaped recovery in traditional markets and encourages investors to monitor signals and economic development. He highlights the importance of staying informed and adaptable in navigating both traditional and digital asset spaces during volatile times.
It's sliding in the final hour today. BlackRock's Rick Rieder saying last hour that the animal spirits that helped drive the market higher at the end of 2024 are part of what's hurting stocks now. Take a listen.
We came into the beginning of this year, it was all about animal spirits, and it seems like it's moved to animals in hibernation from animal spirits, and that can translate into a bit slower growth for a couple of quarters.
So that was interesting to me, Tom Lee, as I bring you into this conversation, the head of research at Fundstrat and a CNBC contributor, because he's talking about animals in hibernation, not animals dying. But it goes back to this idea of uncertainty around things like trade and tariff policy, and the fact that as of right now, in the midst of that uncertainty, perhaps companies are sitting on their hands before they start to make any kind of future investments. So if that's the situation, how much does getting some sort of certainty now frame the investment thesis for how you position yourself moving forward?
I think that's exactly what's happening now, Morgan. First, in 2018, which Michael was talking about, the spike in the VIX or the collapse in investor sentiment or consumer confidence, that all happened around February 2018. So really that coincided with that first low that was made in 2018, and the market began to stage its recovery. I don't blame any business or investor for saying, look, there's so much uncertainty, I can't make a decision. I think that's why Rick Rieder's talking about animals in hibernation. But as we start to think about the second half of this year, first of all, we've already had the collapse in sentiment. We've seen $850 billion of cash raised over the past year on money market balances. And then in the second half, we're looking for possibly tax reform, which really propelled stocks in 2017. So I think that the odds of a V-shaped recovery in stocks that come after April 2 is just extremely high, because we've already sequenced a lot of the panic that people saw in 2018. I think it's already taken place.
Tom Lee highlights a significant collapse in investor sentiment that began in February 2018, driven by rising uncertainties around trade policies and tariff. This period of hesitation among businesses and investors created a challenging environment but also laid the groundwork for recovery. With substantial cash reserves built up and the potential for tax reforms ahead, Lee foresees a strong V-shaped recovery in the second half of the year as clarity returns and confidence rebuild. Meanwhile, the crypto market is navigating a turbulent phase. NFT sales have plummeted, yet some standout collections demonstrate resilience amid broader market downturns. Cryptocurrencies like XRP face technical and macroeconomic pressures, suggesting potential declines, while regulatory developments add to the evolving dynamic. Lee emphasizes the importance of staying informed and ready to seize opportunities as markets adjust to shifting conditions.
What would you be buying right now?
Well, to us, I think Exhibit A for a V-shaped recovery is going to be Tesla, because it's really been one of the most controversial stocks, and it's been caught in that sort of political maelstrom of Doge and Elon Musk's involvement in the White House. And I think it's already recovered more than 15%. But I think if Tesla is leading us into this balance, that's a bull case for Mag 7 to be the group to own in the next few months.
So you like Mag 7, even though we've been talking about things like cash burn at Microsoft and all of the CapEx investments and worries about a bubble in AI spending?
Yeah, I mean, in some ways, it's been a self-amplifying downturn, right? Because we've been worried about AI as a bubble and the CoreWeave IPO at a time when we have tariff uncertainty. So I could see it as a very convenient reason why investors have actually avoided Mag 7, and it's been the group that kind of really led the downturn. But it is a cyclical trade too, because I think once investor confidence returns and they're going to start to buy stocks, the Mag 7 are not only the best companies, but they're the most liquid and they've really derated. On top of that, I think, financials and industrials look attractive as well.
What do you think it takes to see that reversal in sentiment? We talk so much about when sentiment gets negative enough, it becomes a contrarian buy signal. So if we're there now, then what are going to be the catalysts to start to shift that confidence again?
Well, I think the focus right now is on April 2. So I think the market has a lot of myopia around getting tariffs and tariff clarity. But we know that tariffs are just one part of the administration's goal. There is reducing regulatory cost, and then there is extending tax cuts. I think as investors start to think about that for the rest of the year, that gets them quite excited. And of course, I think we have a lot of what I would call spooled energy. Investors can't stay this bearish. The VIX can't stay this anxious. There is a lot of firepower and dry powder on the sidelines, and I think businesses can't stay cautious forever. I mean, once they know the ground rules, I think they're going to actually start making decisions.
Tom Lee highlights the collapse in investor sentiment in early 2018 due to trade and tariff uncertainties, but expresses optimism about a V-shaped recovery. With significant cash reserves and potential tax reforms, confidence could rebound, leading sectors like tech and industrials to drive growth. In crypto, market volatility persists with declining NFT sales and bearish signals for XRP, but resilient collections and regulatory clarity offer hope. Lee emphasizes staying informed and proactive to navigate these shifting landscapes. How will regulatory clarity shape the future of crypto markets? What assets or sectors do you see leading the next recovery? Let me know in the comments.